for his view on resource investing, we're joined by Rick Rule. He's the founder and chairman of Sprott Global Resources and Sprott Asset Management USA, and he is in sunny San Diego. How are you, Rick? Thanks for joining us.
Fine. Thank you for having me.
So we know that gold and silver bulls like to point to monetary easing and money printing and weaker currencies as to why precious metals should continue to rise. Give us your overview on that idea.
I think I agree broadly with that theme. Gold and silver, and platinum for that matter, are denominated in U.S. dollars. It appears to me that all of the fiat currencies are getting weaker through things like competitive devaluation and societies spending more than they earn. The United States started with the greatest socio-political franchise in the world, but we're doing our best to debase that. And if precious metals are denominated in dollars, and if the dollar itself gets debased, if you debase the denominator, at least the nominal price of precious metals rises. Also, historically, precious metals have been a medium of exchange that is simultaneously a store of value. They have done well in periods of uncertainty. It's difficult for me to understand how anybody could look into the immediate future, say 5 years, and not be touched by uncertainty.
Rick, we're looking at gold right now. It's really been in a range here after going over $1,900 last September. Just wondering, why do you think gold didn't go over $2,000 this year, and why isn't silver having a better run?
Well, I'm not a conspiratorialist. Other people would have a different answer to that. I think that consolidating a gain is normal and helpful. I also think that speculators and investors' expectations of the future are set by their experience in the immediate past. And the risk off trade has been to U.S. bonds, long-term bonds in particular, despite the math. We've been in a 20-year bond bubble. And people have gone to bonds during periods of economic difficulty because their experience with the U.S. Fed has been that the U.S. Fed cuts interest rates, which is, of course, bullish for bond prices. If you do the math, it's difficult to understand how they could cut the interest rate too much more. Perhaps you'd buy a $1,000 bond and have to send the Treasury a $50 check a year. I don't know. But I suspect that the bond trade is over. And as a consequence of that, I think that you'll see some form of asset swap from those bonds into precious metals.
And what type of precious metal stock should investors be looking at, and what are the risks to look out for?
Well, that depends on the nature of the investor. I would start any precious metals portfolio with the metals themselves rather than the equities. For those investors who are willing to take a bit more risk, certainly the royalty and streaming companies offer you the ability to participate in the precious metals game without the chance of operational risk, because they're one step closer to God, if you will, on the balance sheet. But I think the real opportunities for investors and speculators who can afford risk is the developmental stage companies that have produced preliminary economic assessments, in particular where the preliminary economic assessment valuation is substantially in excess of the market capitalization of the company, and where there is good capital efficiency, i.e. the front-end capital costs are relatively low relative to expected cash flows, and where the internal rates of return are relatively high. I would not recommend that speculators get involved in the stories that worked 7 or 8 years ago, which is the very large, very low-grade plays that are optionality plays on gold and silver prices. I would look to companies that will be financially accretive to their acquirers at today's gold and silver prices. And I think those are exceptional opportunities in the next 24 to 36 months.